Boom! What's going on, guys? 360 digital closing bell here. Daily energy market summary here on this gorgeous Thursday, October 29th, 2020, episode number 148. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado. As always, I'm joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. Holy smoke, Stu. Are you surviving today? It's been busy.
Oh, it's a beautiful day in the neighborhood, but it is Swamp City, man.
And you want to talk about earnings today, Stu? We've got CNX, Ovitin, QEP, ConocoPhillips. You're going to talk about Shale in the international news. We'll cover everything from an earnings perspective. We're also going to cover ExxonMobil cutting 2,000 jobs. Stu's got some interesting stuff on coal in the international news desk. We'll cover everything that's happening in the equities markets. But first, guys, just subscribe. 360 digital closing bell, iTunes, Spotify, YouTube. Specifically, subscribe on YouTube, guys. The best way to stay up to date on all of your energy market stuff. Do whatever makes the algorithm go nuts. Over on the equities markets today, I mean, really, we saw tech stocks soar today, mainly because earnings come out. Facebook, Apple, Microsoft, all up big after they're expected to announce pretty, blockbuster earnings. I think if there's certain industries that aren't losing value during the coronavirus, it's these e-commerce sites. Amazon is going to release aftermarket. They're expected to see some huge growth, specifically moving Prime Day into quarter three, or moving it into quarter four, looking to be, we'll have kind of data on what that'll look like. It'll be unbelievable. S&P/Y was up 2 percentage points. Dow Jones up 0.6 percentage point. Nasdaq was up about 2 percentage points. We also had really good GDP data that came in. We expanded GDP in quarter three by 33%. Woo, that sounds great. Only to know that last quarter we plunged by 31%. So to kind of give you the balance out, I'd love you to read the headlines too. Best ever U.S. domestic product growth for 1 month, following what was also the worst. So it's just kind of balancing itself out. But, more than what analysts were expecting. So I think it's part of what's baked into these indices right now. Moving over to the oil and gas markets, guys, global storage fundamentals continue to drive markets right now. We saw oil all the way down in the 35 range, found some support, rose itself up really off some really good natural gas stocks. And I think the expectation that as the markets continue to kind of tumble, hopefully we'll see some stimulus on that side. But traders on crude oil driving that. Global stocks continue to rise. That's really what's driving this downward motion. What's funny is we're seeing oil continue to tumble, Stu. All these earnings, they're talking about all the capital expenditures they're going to do in 2021. It just makes my brain hurt. Those indices, specifically crude oil right now, trading at 36.36, that back end of the curve now, 39.39. So, just give you an idea, back end of the curve all the way down, under $40 for the 12-month strip. I did see a very interesting graph today that I want to repost, which actually had the breakdown of the 12-month strip overlaid where all the pricing was. 12-month strip does a terrible job of predicting what prices are going to be. It's really only sensitive to what's happening. Do we think in the future it's going to be worth more or less? That's really the trend you get from from that 12-month strip. Do we think, are we in contango or are we in backwardation? Do we think the future price is going to be more or less? Right now, we're bullish. I don't know if that actually should be the case, though, considering some of this global storage number out. If you traded natural gas today, though, you had yourself a day up 10 percentage points, $3.30 even. Unbelievable for the front end. Again, storage numbers came in very low, 29 billion BCF build. That is analysts were expecting anywhere from 40 to 46 BCF, so good numbers. Now we're flipped into backwardation now. We're now in a contango market for natural gas, back end of the curve trading at $3.10. So people think that front end not as strong as the back end. Where's this $4 gas? I don't know, but I do sort of see the reason for it. So it's interesting to see these long-term oil dynamics play, where that 12-month strip is relative to where we think that front end is going to go. Just be wary of that, guys, when you're looking at this stuff. It's really that front end that we care about for crude oil. Again, 36, 34, not good. 2.5 percentage points on the downside. So fundamentals are just killing us on the supply side. And that 12 month and that back end or the front end of the curve for natural gas, $3.30, even up 10 percentage points. XOP, which are E&P securities contract, up 2 percentage points today, which is good. Actually, outpaced the S&P, which is about 1.6, 1.7 right now. OH, which are oilfield services, up 1.3 percentage points, 91, 97. Some big movers on that. First on the downside, Ring Energy down 7 percentage points, Contura Energy down 8 percentage points, Sandstrip Midstream down 15, Arch Resources down 15 percentage points. On the upside, QEP had a good day. They released earnings earnings today. SM will release earnings here. They're up 6 percentage points. Shell, which Stu will cover here, had themselves a great day. They're up 7 percentage points. Ovitin, which we'll cover, they're up 6 percentage points. Callan, there's some interesting debt news to drop there. Speaking of Shell, Stu, let's go on the international news best. Let's start with their earnings. How were they?
They were pretty good if you can consider COVID. Excluding inventory expect was 177 million, down by 97% considered a year earlier. Previous in the 3 months, it had made a loss of 18 billion as a hefty repairment. You and I just talked about last week the FLNG in off the coast of Australia,
the $2 billion wire.
Oh, yeah, it was 13 billion to build this thing. Has not been working since January, and they took again 1.1 billion impairment charges because of that wire. I thought that was an interesting nugget. There was about 9% below the previous quarter, which is not bad. I believe, I need to fact check, that's better than what they were expecting. Fourth quarter range of 3.1 million barrels to 3.3 million barrels per day is what they're expecting. That'll be a number to watch for them. Also, in their near-term targets, their CapEx of 19 billion and 22 billion, and then they're going to have 4 billion in divestments a year. That was what the big news was there. You want me to keep going?
No, you're good. I think, I mean, it's interesting to see these super majors as they shift. They're going to take hits in the short term on their profit line as they move to a more sustainable platform. We saw this with BP. A lot of that stuff, that offshore wind stuff they're doing with Equinor, whether or not it's going to help them in the future, it's that short-term capital cost hurting them right now. Absolutely. What else do you got in the international news desk today?
Okay, fun one. We've always had some fun with Gulf OPEC. We've got some interesting questions here. Gulf OPEC Iraq question: whether or not to keep deep oil cuts into 2021. Pretty funny on the news desk here. The United Arab Emirates is around 33% of its potential output. They're putting out 2.5. Michael, they're putting out 2.5 million barrels per day, down from 3.9 million. That's amazing. Kuwait is at 2.2 million after it was at 3.1 million barrels per day. Here's the funny one. Iraq will stay committed to OPEC plus. Excuse me while we have a moment of humor. We'll cut a deal in respecting our pledge not to only cut production for the missing months, said a senior Iraq official. I'm not sure that I'm going to have a believe on that one. And all OPEC members, this is another quote of the day, all OPEC members must understand that Iraq's critical situation when it comes to discuss a new cut of expansion deals.
Yeah, that's the wooden paddle they're trying to slap. Whoop-bang!
Newspaper on that bad dog. Here's another one. For the rollover to work, I think these baseline quotas need to be looked at again.
You don't say so.
I could have told you that one. There was no thing there. Here's a really good one, Michael, from the Department of Energy today. Yep. Coal First program. Really, really neat. Energy plant concepts that could possibly provide coal-fired going to hydrogen that could be negative CO2 emissions. The Coal First initiative is pretty darn cool. From the Department of Energy today. This is also going on in Germany. I'm trying to run down some more specifics on coal fire going to hydrogen. I
love it. Let's make coal great again, Stu. Make coal great again.
Yes.
I love that
Pennsylvania.
clean coal. I watched the. You probably haven't watched this, but I'm sure everybody who is my age has already seen the Joe Rogan, Alex Jones interview. They talked about this idea of clean coal, and it was pretty fascinating. I got a hoot out of it. I was waiting the whole time. They were looking up coal energy articles. I was like, holy smokes! If I see 360 pop up on here, I will cry. But they didn't, unfortunately. Pick some other articles. But there's some really fascinating stuff going on along that coal stuff. So I highly recommend people checking it out. Thanks for covering it, Stu. We move over to the U.S. shale, guys. Holy smokes. Earnings. CNX, out of, QEP, ConocoPhillips. Let's just start. First off with CNX. Remember, reportedly, we're going to get acquired earlier this week by EQT. EQT go ahead and buy Chevron Appalachian assets. Well, CNX, they come out with lighter than expected earnings. They're down about 15, or they're down on revenue about 25 percentage points, but markets did like it. They were about 3/4 of a percentage point off, better than expected revenues. A lot of that has to do with the fact that their midstream company did very well. Remember, they own 100% interest in CNX midstream. So they're able to kind of weather some of the storm there. Vitin, this is funny. They lose revenues of 1.9 billion, but they lose about 585 per share. What's interesting, though, is the loss was less than expected. Markets actually up 5 percentage points. Vitin up after, losing $5.85 a share. The Denver-based company, or as we like to say, the artist formerly known as Canada, that total write-down comes about $1.5 billion. They actually reported a profit in the same time last year. I think it's same old with Vitin. Or whatever they want to call themselves when they end up rebranding again. It's not looking. I'm looking at the cash flow statement right now. I mean, we're looking at I love the quote. I'm looking at the quote right now. Strong financial performance. Guys, your shares are down 63% since the beginning of the year. You're killing me here with this strong financial performance. We also have QEP. They're up 6.5 percentage points off earnings. Really, the big thing to realize there, they got a $170 million tax refund, or what's called an alternative minimum tax credit refund, which also included $5.6 million of interest that they paid. That basically, when you overpay taxes and they forget about it by that much, the government owes you interest. So now all of a sudden the IR that's a place you want to be in as a company. When the IRS owes you interest, I don't know if this is a good or bad move for their CFO. I don't know if this is a good or bad thing if you're the CFO. You've been overpaying taxes for a couple of years. Hey, getting it back with some interest. There you go. That ended up providing. They hit $329 million of net cash provided from operating activities. It's non-GAAP, but they did do about $100 million of what I would call legitimate free cash flow. But I would call this legitimate. You got $170 million extra cash last quarter. You actually were able to turn a little bit. QEP shareholders love that. Again, they're up 6.5 percentage points. ConocoPhillips, they lose $300 million specifically because they're trading and refinery prices on the downstream just don't look good, guys. These spreads, with refineries only working at 80%, these spreads all of these guys are working with, all these refiners are working with around the country have just been absolutely shot. That's really what's holding QEP or ConocoPhillips down. Again, they lose $300 million. Remember, this is a time when they've got, the quarter one 2020 will be interesting to see when that deal goes through. Quarter one 2020 earnings or 2021 earnings for Conoco is going to be very interesting because that's when they absorb all of that Concho debt. So yes, they lose $300 million. Markets sort of, they're pretty flat right now. You're only up about 1/10 of a percentage point. But really what's interesting is what comes 2021 for them. I hate to end it on ExxonMobil cutting 2,000 jobs, but guys, it's what we've got to do. The quote out of Exxon came, the workforce reductions are a result of ongoing reorganization and work processing changes that have been made over the past several years to improve efficiency and reduce costs. These actions will improve the company's long-term cost competitiveness and ensure the company manages through the current unprecedented market conditions. The impact of COVID-19, sure, it's COVID's fault, on the demand for Exxon's products have increased the urgency of ongoing efficiency. I'll give them credit. Exxon is actually someone, because they make a lot of their money on their downstream side. These super majors are all reporting losses because of the downstream stuff. I don't think, these guys are not cutting because they quote unquote overspend on shale. This is a lot of just has to do with their refining and marketing stuff is down. They understand that these will impact employees and families and has put them programs in place to only add comprehensive evaluation. Employees who are separated through involuntary programs will be provided with support, including severance and outplacement services. Well, at least they're not making their people reapply for their jobs. That's just what we would call cruel and unusual punishment. So at least they're not taking the Chevron route.
Yeah, I thought that was funny. Good one.
Yeah, so outside of that, that's really kind of the big news of the day. As as these big thing to take away when you're reading earnings today, guys. Don't look at the press release. Dive into the 10Qs. Please look at the 10Qs. They're going to tell you everything you need to know. Another thing I took out: if the first line in a press release says free cash flow, forget about it. They're not good. If they have to go to non-GAAP free cash flow as the first line in their earnings statement, just forget about it. You don't want to invest in that company because they're just trying to. It's like the what do they call it? The Pampola bull thing, where you got the little thing out that the bull runs through and you pull it through. That's what they're trying to do.
Oh, you had a term, yes. Was it yesterday? Profit redistribution, or I'm not sure.
Performing. What is it like? Performing while transforming. It's like, great, you showed up.
Yeah,
That was what BP said. That's what BP said. You're great. You're showing up to the party. Now we're just getting credit for showing up. I thought that's what we were doing in elementary school, not straight up business. But I guess that's what it's moved to. So, Stu, anything else we need to cover?
no, our hearts go out to those that are losing their jobs.
And with that, guys, we'll let you get out of here, get back to work. Thank you for checking out the 360 Digital Close Daily Energy Market Summary, episode number 148, here on the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow for another show.